I want to continue this market conversation now with Greg Swenson, founding partner at Brigg Macadam. So, Greg, I want to first just start here on Bitcoin and cryptocurrency. I'm going to ask you about Gary Gensler's comments in just a moment. But I was reading through your notes. We're seeing right now Bitcoin down over 3%, actually almost 4% right now. Now, in your notes, you mentioned that Bitcoin, you called it a great inflation hedge. Why so bullish on Bitcoin as an inflation hedge, especially considering the amount of volatility that we have seen in Bitcoin and in cryptocurrency, just even in the last 2 months?
Yeah, it's a great question, Kristen. And yes, there has been plenty of volatility in Bitcoin. I mean, it's off almost 50% from its all-time high earlier this year, and you saw a lot of short covering. Even last week, I think on the 25th, it went up to 48 at one point because of the massive liquidation of short positions, and then it settled back in around 40. So, look, it's been in this range. It's sort of stuck in this 30 to 40 range. I think it's a massive buy when it gets close to 30, and maybe you take some of the leverage off when it gets close to 40. But considering that you have this emphasis on regulation and all this chat from the SEC and other regulatory bodies, and it's still holding in there in the high 30s, I think that's a really good sign. And I think, as you mentioned, long term, it's a great inflation hedge. The volatility, you have to live with it. You buy on the dips when you see 20% corrections, buy more. But at this point, I look at it as a long-term inflation hedge with the money printing that's going on from the Fed and the government with the reckless spending. I think it's a must-have in your portfolio.
So now, of course, I would love to get your thoughts on what SEC Chair Gary Gensler did say about how he wants more oversight on not just Bitcoin, but the other cryptocurrencies. We've heard from some folks say that in the long term, regulation is actually going to be good for Bitcoin, good for some of the other cryptocurrencies. Of course, short term, it does cause at least some pressure on cryptocurrencies. But what are some of your thoughts and some of your comments that regulation is definitely coming or could be coming down the pike for cryptos?
Yeah, look, it's inevitable, especially with this administration. I mean, if it moves, tax it. If it moves a lot, regulate it. That's going to happen, and ultimately, it stifles innovation. It adds market friction, which is unfortunate. But I think that's built into the price right now. Those expectations are there, and I don't think that's going away. So over-regulation is something that the market has to deal with. It's unfortunate. It's happened in the energy sector, since January, and I think that's been a headwind both for cryptos, for Bitcoin specifically, as well as energy, which you talked about in your prior segment. But I don't. Ultimately, it'll be okay. And Bitcoin has done well in spite of the ban in China, liquidations around tax time, and I think you expect some additional or increased pressure for regulation as well as taxation. So that's something that ultimately will be a bit of a headwind. But I think in the long term, again, with the massive spending and the debasing of the currency, I think it's a long term buy and hold, and don't worry about the volatility.
All right, Greg, I want to move away from cryptos for a moment and talk about the broader market and where you see opportunity, because I understand you actually like equities outside the U.S. right now. Can you tell us in particular which markets you're looking at?
Yes, I mean, if you want to talk about specific or individual stocks, in your early segment, we talked about BP earnings, and that's fantastic. I think, I've been talking about BP for a long time when you could buy it at around a 5% yield. I think it's down now with the rally today around 485, but that's still a great yield, and it's got exposure to energy markets, quite obviously, and that's a good inflation hedge as well, because, obviously, to have exposure to oil and other energy segments is a good thing in an inflationary environment. In terms of the European market overall, if you're playing the rebound trade, if you're playing the reopening and the economic rebound, it's a good sign. In Europe, the expectations for earnings are actually higher. Earnings growth are actually higher in Europe or the MSCI ex-US. And also consider that you'll see more of this rotation trade out of tech into cyclicals. Cyclicals are having a great day today. They've done well this year, but I think that rotation will continue. And the MSCI ex-US is 56% cyclical or industrial, as opposed to only 13% tech. And in the U.S., the S&P is 37% cyclical and 27% tech. So if you're playing the rotation trade, I like Europe and the rest of the world a lot more than the U.S.
All right, we're going to have to leave that there. Greg Swenson, Brigg Macadam Founding Partner, thanks so much for joining us.